All right, good morning, guys, and welcome to this live stream here, straight from streaming from our Surrey offices. Good morning to obviously everyone listening on the Futex Live and Futex traders, and just a little to bring everyone up to speed with effectively what has happened. We're just going to start off and talk just briefly about the ECB now. In essence, what Draghi has done is he's delivered a very masterful act, and what he's told the markets in essence is that he foresees that potentially they're going to have to change effectively their QE program in some form, and that could be composition, it could be size, it could be what type of assets they purchase, and it could also even include a cut to the depot rate. Now, the important thing to understand is that Draghi committed to nothing yesterday. He merely told the market that at present there are downside risks. There's the continued sluggishness in terms of their recovery, and they're foreseeing a potential for their medium-term expectations of inflation to drift even lower. So he's almost prepping the market and saying we could potentially do more if over the course of the next 4 or 5 weeks, we see a continued slowdown, particularly in our inflation expectations. So that's the first thing to understand, because what we've effectively seen overnight and over the course of yesterday is that particularly the front end of the Euribor curve, or the front end of the European curve, has effectively almost priced in 100% chance now of a depot cut in December. So the markets have almost got slightly ahead of themselves in a sense that they're almost fully pricing that he's going to do something in December. And there's lots of hints in the Q&A there where Draghi kind of said, you know what, whilst they did discuss the negative depot rates, in essence, no decision has been taken on it yet. And whilst they did discuss, types of instruments they could particularly, change in December, no decision has been made yet. So it's very important to understand that, because you can get so caught up in the market euphoria and what the journalists are reporting on, that you forget to actually pay attention to price. So in essence, what we've seen this morning, Asia rallied, of course, continued overnight with the theme from yesterday. Very strong Asian rally in the indices. This morning we've effectively, particularly in the European equities, we've just had a little bit of a range gap. So we've kind of opened outside of a range yesterday, tried to re-enter range and failed, and currently we're sitting nicely positive up on the day. So again, in terms of the equities, there is still very much from a technical perspective, there is still a bullish technical play at hand. If anything, once the buyers start to step in, we could see these equities continue higher. As for the bonds, well, we tried to pop outside of yesterday's ranges, failed, and have come back in slightly. So it does look as though, in terms of two-way trade, it seems as though you're going to get a lot more of that in the bonds versus the equity. So that's kind of how I'm looking at, playing the bonds and the equities this morning. Two-way trade in the bonds versus maybe a little bit more directional buy-side bias in the European equities. Other than that, obviously a key market to focus on is the euro currency. Very important this morning. As you can see, the euro currency is a little bit mixed. It is fractionally up, I'd say. It's not trending up. I'd say it's probably just a little bit of a profit take move after the very big down moves in the euro yesterday. So right now what I'm looking to do in the euro particularly is I'm looking for it to actually run into some sort of resistance, find some sort of sellers, some interested sellers that want to be actually shorting the euro against the dollar pair, and it's at that point that I'm going to be looking to get involved. So right now, again, I'm kind of looking somewhere around the 50s to the 60s mark, in terms of the euro currency against the dollar. But note, guys, very important, if you were to look at any of my charts, I've got a lot of what I like to call sort of markers on the chart, because a big mistake a lot of traders make, particularly after a fundamental driver like yesterday's, they come in with a little bit of a strong bias, and whilst that bias is important to have, it can be particularly expensive if you get it wrong. So just make sure you understand, whilst there should be a continuation of yesterday's sort of directional moves, it's not necessarily a guarantee. It may be a case of, for the next 5-6 days, we move sideways before the trend then continues. So keep that in the back of your mind. Pay attention to what price is doing, pay attention to where price is, and obviously keep in the back of your mind that there is a positional bias in the market right now to be long equities, long bonds, and short the euro. So we're going to leave it there. That's basically where we are now in terms of this morning. Other than that, I'm going to talk you through a few plays that I might do at some point. If I go quiet, it's not because I'm not trading, it's just because I'm actually just physically looking for something to do, looking for somewhere to take part. If you have got any questions, I will keep my Twitter account up. You can ask away if I go a little bit quiet, and I will try and answer those for you. Okay, right now we've seen that bund run into the sort of 50% on the day, and we can see if you look at the ladder here, you can actually see some nice absorption coming on the offer. So we've got a little bit of a fractured profile in a sense that we've kind of got two little distributions that have formed, where the bund sort of accepted 55s to 60s this morning, and then sort of 40s to 46s. And what I'd expect to do now is to have this bund just fill out the middle of this profile. So the way I'm going to play this is I'm going to actually start looking to just try and buy into any kind of selling around these 41, 42, 43, and try and trade those back up towards that sort of 55, 56 area, and allow this bund just to start filling out and distributing in the middle of the range. Obviously, keeping in mind I am keeping a very close eye on this euro. I will move this ladder across, actually, makes it a little bit easier to see. So right now this is the euro-dollar currency. I am keeping a close eye. I am looking for shorts. Note again, note where value's been accepted on a day. In other words, the value's been accepted down sort of 111.10s, 111.20s. Now, it's important to understand that, because the further we drift away from value or move away from value, the more risk reward I'm likely to achieve once I get a short off. So in essence, what I'm saying is the market today, given the directional bias and given the short side bias in the market, should not move too far away from accepted value, which is currently down around this sort of 111.10, 111.25. So the further we get away, that then I can start to calculate good risk reward metrics. But again, guys, bear in mind, whilst I want to be short, I do understand the fact that we sold off very, very aggressively yesterday. And the fact that we've just bounced, 30, 40 pips does not necessarily mean that we're going to continue on down today. So again, I'm looking for shorts, but only so that but I do have obviously risk parameters in place to protect me from doing anything silly. Okay, so very interesting. We're going to try some sort of a scalp down here. We're going to look for a little buy side opportunity in the bunds. We're going to try and just pick up where that seller sort of stops selling, but that buyer becomes a little bit firmer on the bid. So just going to pay close attention. Note, we're not doing any directional trades now. We have no real setup here. There's nothing really from a swing type trade opportunity. This is going to just be purely scalping, purely looking to take a few little ticks out of the market. Just wait until something that makes sense actually props up. But right now, just looking to scalp, looking to play inside the range, and just partake in a few ticks. So let's have a look at this bund price action and see if we can pick up where that seller stops selling and that buyer becomes a little bit firmer. In terms of reference points in this year, I'm looking somewhere around those 62s, guys. It acted as a two-way trade sort of area yesterday. There was some sort of profit taking on those 62s initially on the down move yesterday. The market did sort of respond off it. We had a nice 25 tick bounce to the upside off the 62s, as the sellers kind of backed off a little bit and we saw a bit of profit taking. But once we took out that area, we had then a continuation move. So once we took out the 62s, we moved very, very swiftly back down to 20. So we had a nice 40 pip down move on the break of those 62s. So again, I'm not suggesting that there will be sellers there. I'm not suggesting that this is the almighty resistance. What I am suggesting, however, is it acted as a response point in the market yesterday. By that token, it should act again as a response point today. Just initially, and note, guys, I am with the trend here. I'm not fading. I'm not going against the trend. The trend is very firmly to the downside. Yes, we're seeing sort of profit taking and an up move initially, but So long as I stick with the trend, I'm going to be protecting myself a lot better than, going against the underlying trend. So that's kind of why I'm looking to maybe fade or sell into this, because I'm going with the trend. Whereas if this were the other way around, for instance, let's say the euro was on the downside and moving very aggressively low and I was buying it, well, that's me going against the trend. That's me fading the trend, and I'm taking a lot more risk in that sense. So just make sure you understand that too. So we're going to leave this euro for now, move back into this bund, and let's see again. Let's see if we can watch where that buyer steps back in. So as you can see, our 45s, 13s traded, 13 contracts traded at 45. Again, someone just sold into the 45s. If we can see some reloading on these 45s like that, we're going to get long. We're going to try and bid this back up, keep it nice and tight here. We want to make sure that this buyer goes a little bit firm around these 44s, 45s area and takes the market back bid. Okay, so we can see again the reload on the 45s. Someone has stepped in and they're now reloading the 45s. And we should see that buyer, if he's going to be a little bit stronger, we want to see him lift 46s. If he lifts 46s, the seller should disappear. As you can see there now, the seller is just reduced. So we should see this market go back bid. Again, note, we're going to keep the risk nice and tight. We don't want to see 44s trade out. If we do, well, we'll just minimize the risk and try somewhere else. So again, we can see the buyer is stepping in here. We can see him defending this. It's the first time on this down move that we've seen a bit more of a buyer come in. Okay, again, seller sells into 4s. We want to see that buyer step in now. Otherwise, we're going to have to cut the position. Okay guys, we're going to cut this position, try it again low. We can see obviously someone is selling these lower prices. There is someone buying it, so there's the two-way trade. But obviously the seller's a little bit more intent on taking these prices lower. What we're going to do is we're going to cut this position out and try and live to die another day somewhere else. Again, remember guys, so important, mistakes so many traders make. This job's not about, getting it right. It's about when you're wrong, minimizing, managing, making sure that you're not going to do too much damage when you're wrong. You manage to do that, you become a very successful trader. It's the guys that get stuck in a view, that cannot take the losses, that cannot accept that, I've gone a few ticks offside, that cannot take those losses. Those are the guys that tend to do a lot of damage. So, whilst this could go bid and it could go back to 48s and it could have been a winner, it doesn't matter. The important thing is we manage the risk and we execute accordingly. And when it works, we make good money. When it works, we do well. When it doesn't work, we're minimizing our losses and sort of, as they say, living to die on another trade. So important to understand that. You'll see over the course of the next sort of hour and 15 minutes, I'm never afraid to take a loss. I'm very quick to get out if it feels wrong, if something doesn't play out the way I sort of expect it to play out. So important to understand that. Anyways, nonetheless, as you can see, we are still seeing some absorption here. We are still seeing some sort of buying and selling. So there is a seller, but he's selling into a buyer as we expected. So we'll keep an eye on this trade. Maybe if we can find some sort of a bid back up, we might just try and go in again, try that long trade again. Okay, we can see that offer just pulling away a little bit, so we're going to try this again now, see if that seller's now finished with his business. Okay, and again we're going to try the scalp. We're going to try and look for some sort of a bid up to the, some sort of a little 48s, 49s. Again, try that scalp trade. Again, as you can see now, the offer's sort of started to get pulled here, so we can see that seller's, I wouldn't say he's necessarily gone, but he looks as though he's done at these lower prices for now. And if that buyer is still going to be buying, then we should be able to get some sort of a bid up again. And so again, if we'd rejoin this bund, notice how the 47s there, we had 300 lots there offered, and now it's become 160. So again, you know, if I'm a seller, I'm looking to sell, and I'm suddenly seeing obviously someone start to buy it, well, you know, I'm not gonna offer too aggressively. I might as well let him come and buy it from me. So again, you can see the 309 posted, but if we suddenly went bid sevens, you'll probably find that only sort of 150 of that will actually trade. So let's just keep an eye on this. Okay, again, you can see there already 70 contracts disappears. Let's see what happens if someone buys into those sevens. Let's see how much gets lifted there. Again, note the reloading at sixes, so we can see the buyer now taking a little bit of the sell side action again. Now, we don't particularly want to see a seller come in here. We only want to see a buyer step in here. We're expecting the market to go bid, so we're expecting to see buyers step in. If we still have sellers, it might just mean that we're going to sit at these lower prices for a little bit longer. Unfortunately, guys, with regards to today, it's not the most exciting session. Obviously, there's, with ECB and all that, it's a little bit of a hangover type day where we've had such exuberant, fast moves yesterday that the market's almost in a state of hangover right now, and so the moves are going to probably be very patchy, if anything. So I wouldn't expect any kind of straight line drive moves. So hopefully I can, in between this, just show you guys what some of these slower conditions look like, and how we sort of try and combat our way around these slower conditions. It's a different style of trading. Obviously you have to be a lot more patient, and you really have to pick those fights you want to take on. So we'll keep an eye, and hopefully I can give you guys a good couple of ideas, share a few thoughts with you, and hopefully you can learn a thing or two over the course of over the next hour or so. As you can see, we still see this buy sitting in here. Obviously there's two-way trade, which is never ideal, but right now, we're still a play on those longs. We don't particularly want to see 44s trade, otherwise we'll just cut the position again and try and find something else somewhere else. I will give it probably another 10 or 15 minutes, and I'll get the Twitter on. And if any of you want to send me a tweet, if any of you at the Investor Show want to send me a tweet, you can send me a tweet at BJB_Futex Live. Ask away. Feel free to ask. I will try and answer your questions as best as possible. We can actually get quite a nice little interactive session going. The session is for you guys. It is so you can learn. It is obviously a slower session, which means things will play out a little bit slower, but it also gives me time to sort of give you nice, concise answers. If there's anything on the charts you want to look at or want me to explain, by all means, I've got the charts here. We'll get the camera on the charts, and we can hopefully answer your questions as best possible. Okay, again, we're going to cut this position. Yeah, we are seeing sort of a buy step in a 44s, yeah, but we kind of don't want to see this seller at the moment is just being a little bit of a pesky seller. Unfortunately, we're just going to cut this position again. Like I said, hopefully when things become a little bit easier to understand, we can make back some of the small little losses and hopefully then make some money as well on the day. It's so important also, just note guys, when in these low conditions, if I showed you a chart, and then I will show you when the cameraman comes back in a sec, is one of the most important factors to look at. If we can just pop the chart up, yeah. If we look at this top right screen, this is sort of a 1 minute reaction of how the market's responding now. I'm not so worried about price direction in these conditions. What I am worried about is this very, very, very low volume now. What you traditionally get, what you'll get a lot more of when there's such a low volume is less directional plays. So you can develop a nice strategy of when volumes drop below a certain point, that you then look to maybe not play any type trend momentum type moves, but you actually look to almost, I don't want to say fade momentum moves, but fade lack of momentum moves. So you do get a lot of playing games, particularly with the computer programs, when there's low volume, simply because it's a lot easier to manipulate price when there's not much volume trading. So that's something we do tend to look at. If for instance this down move was created on very high volume, I'd be far more reluctant to be buying this and going against the direction of price. But simply because of the way the market or the conditioning of the market right now, I'm not actually fading the market here. I'm just merely playing within the parameters of the conditions of the market. So important to be flexible. I know you get so many great technicians out there and traders that want to sell you all these courses and all these trade ideas, but what they cannot teach you, and what you have to unfortunately learn for yourself, and which takes a lot of time, is conditioning of markets and understanding is there a high probability for a market to move and trend now, or is there a low probability for markets to move and trend? So just so important you understand that, guys. Keep that in the back of your mind, and we will talk about it. If you follow me on my debriefs, you'll see I so often pay attention to volume and not fading trend-like moves, etc., etc. So we can rejoin this again now. As you can see, this bund has gone very quiet in a 5-tick range. It's just kind of sitting here. We have kind of gone back over the blue line, which is suggestive of potentially making some form of a winner, but again, not very hopeful. No real high conviction here. Yes, I still expect it to go up, but at the moment there's nothing major for me to do here. I'm not going to make a day on this trade. I'm just looking to accumulate a few ticks, scrape in a few pennies, and hopefully that can set me up for something a little bit later on in the day. These little small tick winners you take ultimately give you a little bit of gambling money to take on something that makes a lot of sense at some point in the day. So that's kind of how the day trading institution works. We don't sit here all day taking winners all day. Unfortunately, it doesn't work like that. Good trade opportunities only come along every maybe once or twice a day. Sometimes not even on a day. So the important thing is we sit here, we watch the price, we see how the market's moving, so that when something plays out, when there's a good opportunity, we can really get stuck in, really make the most of it, and actually have some fun doing good trading. So right now, again, back below 45s, just sitting in this little tight range. Again, market just reluctant, just sitting pretty much at the most accepted price of the day. The market's accepting these lower prices, 42s to 45s. Other than that, as you can see, I haven't paid much attention to the equities. I think there's far less opportunities in the equities this morning, as it's kind of just consolidating above yesterday's highs. So we're just accepting value above yesterday's highs. I will get involved if the volumes pick up to the upside and we see a little bit of directional play, or subsequently we get below the low of today and we continue to see a little bit of a profit take move. So right now I'm not interested trading where we are. There's very little opportunity for me in terms of where the price is located. So I'd rather be looking to trade a market that's actually going to give me a little bit of two-way trade. Okay, again, guys, we don't want to see these 43s trade. You know, if seller steps in now and sells these 43s down, we're going to cut the position again, and then maybe just step out of this bund. You know, we don't want to take too many losers doing the same thing. You know, we just accept that maybe the timing's not right. There's, you know, the execution's not quite there, or you know, what we're actually seeing and thinking is not quite playing out. So again, just going to manage this risk to the downside, not looking to do anything too silly. You know, small losses, small losses, small losses. When something makes sense, hopefully we can take something nice out of the market. So right now we're going to cut that trade again and move on to hopefully greener pastures somewhere else. Okay, so right now we're out of that trade. We'll make a note of it. You know, we'll spend some time thinking about it later on. Right now, though, as we can see, the market just continues low volume, just little drift, down, up, down, up, down, up. Quite a bit of two-way trade. Nothing really worth doing at the moment now in the bunds. We just sit this one out, and hopefully we can get some more information elsewhere. In terms of bund trade location, it's very interesting. We're, you know, whilst we're effectively, you know, back inside yesterday's range, we still are very much firmly outside of yesterday's accepted value. So, you know, from that perspective, so long as we remain outside of yesterday's value area with this, you know, this big nice P-tail that we've got on the distribution, if I can show that to you, you know, effectively, you know, the market's still signaling to us that at some point we're going to have some sort of an upside move, you know. So if I was to pick any form of a bias right now, you know, from a technical perspective, completely ignoring yesterday's ECB, I'd be looking for sort of, you know, some sort of a buy side trade. So if I was swing trading this market, you know, stop below today's low, you know, maybe try and get involved somewhere around where we are actually right now, and then obviously, you know, targeting at least a retest of yesterday's highs around the 72. So, you know, good 30 ticks of upside, and it's only going to cost you 12 ticks of downside. So good risk reward metrics on taking that long. You know, technically this market does look like we're going to start pushing back higher, back up towards those highs. But again, like I said, right now the timing's not right for that long. You know, there is some bit of selling coming into the market, you know, so we're just going to leave that alone for now and wait for more information. Other than that, you know, we can probably have a look at a few other charts while we're at it, just in terms of the daily charts. As you can see, you know, we're very firmly in sideways mode in the German bunds. You know, very, very little direction, and when it does form some sort of direction, it's maybe for 1 or 2 days. So there's been a lot of chop in these markets over the last 3-4 weeks. You know, I'd expect no different today. If anything, you know, we could just get some sort of a consolidation day, barring, of course, any aggressive position unwind later on in the day. But right now, we're firmly stuck in this tight range, and I don't expect us to move anywhere else until further notice. Yeah, guys, if you have any questions, feel free to pop them on. If there are any Futex traders listening in, you know, guys, it would be wonderful if you contribute. Send a few questions. You know, if there's any chart you want me to go over, anything you want me to look at, anything, you know, in terms of current market moves you want me to talk about, feel free, guys. You know, this is for you guys internally. It is. Hopefully, you can learn a thing or two. You know, and if there's anything you want to talk about, that'll be awesome. I have been sent a request to sell sort of 51s in the cable by one of our senior traders. He's in our London office, and yeah, definitely we'll be looking to get involved somewhere up top here. I do think there's a lot of good risk reward in being short up in those areas. So again, right now, looking for clues, looking for something to do. You know, try and get those little losses back, get back to, you know, net zero on the session, and you know, that's the job, is to just hang in there, survive whilst it's slow, survive whilst nothing's happening, not do anything crazy, not use too much energy before the fireworks take off, hopefully at some point over the course of this morning or this afternoon. So that's our job as a trader, guys, is be patient, hang in there, don't do anything too silly, and hopefully we can all have the good times later on this afternoon. Just in terms of, a lot of people do ask about, what all the ladders mean and why do we have all the ladders? Well, a lot of the markets, obviously, that are on the screen at the moment, I will be trading actively. But also a lot of the time, for instance, you can see in my top left corner, I've got the German bobbles and I've got the German 30-year. So a lot of the time, you can get very good leads from other parts of the curve. Now, obviously, with what happened yesterday, with all the talk of negative depot rates and further QE, we effectively saw a very aggressive move, led in essence by the front end. In other words, because the front end's far more sensitive to interest rate decisions, we really saw the Schatz and the front end, or the Euribor Schatz, really outperform yesterday relative to the back end of the curve. Now, it's important to understand that, because if there's going to be any reversal of what effectively happened yesterday, it's going to be led by the front end. In other words, if yesterday was a too fast type move, and the market almost getting ahead of itself based on what Draghi told us, then the unwind will start, in essence, on the front of the curve. So that's kind of why I keep very close eye on the bobbles. If we start to take those bobbles out, we take out that low in the bobble, we should see that Bund offer down pretty quickly. So that's why I use the correlated markets. But so important, guys, there's too many traders that have these correlated markets that don't understand what they can use the correlation for, and all they end up doing is they end up taking on positions based on another market moving in one direction or another, and that's not good enough. If you want to learn to trade correlated markets, you've got to understand those pinch points in the correlated market where they're actually going to pull the market you're trading with it. So important to understand that. Like I said, if that bubble takes out those 50s and we see a little bit of size come in below that low, I will be very, very interested in selling this Bund back towards, obviously, the low of the day. Johnny, when you get a sec, can you just ask Alex if he wants at the investor show, just to, if anyone wants to tweet, just give them my Twitter handle.
Sure.
They can ask a few questions away.
Yeah.
Of the Greek PM says that economic crisis remains a threat to the Eurozone.
You do kind of feel, looking at at the Bund and looking at a charting perspective and how it's trading, you kind of feel now there's a real lack of commitment from sellers to sort of sell below these 41s and sell these 40s. So what I'm looking for now is, unfortunately, we have got a tail from this morning, you know, sitting from this 30s to 39s, and that sort of indicates to us that there was quite a strong or a very strong interested buyer or a lack of sellers willing to hold shorts, you know, at those prices, and they subsequently took profit. But there was a very quick response we had from these 30s to 39s. Now, in essence, what I'm thinking is, you know, so long as we can hold above these 40s, you know, the buy opportunity in theory should still be on. In terms of price response, it's not great. There's nothing easy about this. So in essence, what I'm thinking is, you know, if someone comes in and steps in and actually physically commits and sells into 40s there, you know, sells maybe 200-300 contracts into those 40s, you might just find that, you know, the bund just opens up a little bit to the downside, and we actually start to see sellers become a little bit more convinced or a little bit more convicted in short side trades. So right now, that's what we're going to look for. You know, see how the price response plays out with 40. But note again, guys, we for one, we are selling into buyers, and two, you know, we're trying to get shorter market, which is lacking momentum and volume. So, you know, it's probably not the highest probability trade we can take on. There probably are higher probability trades we can take on, but we're still going to give it a go. And in order to give it a go, we're just going to change the clip. So, you know, instead of doing maybe a full clip, we're just going to feel it out. See if we can just, you know, get some sort of you know, something. You know, that's the whole point of trading, is to click, learn. You know, get a feeling for how the market's moving, so that when something plays out that's in your favor, in essence, you can actually make some money. So let's watch these 40s, see what happens, see if someone sells into those 40s, you know, someone maybe with a 200-300 lot clip sells into those, and we can maybe join the party and get on the act. Again, note now, guys, note the lack of conviction. So if you look at the volume going through, yeah, we've got 2s and 3 lots trading 41. In other words, no one wants to be short. You know, there's a real lack of commitment here to be shorting at these, or shorting in any significant size at these prices. But again, that can change, and when that does change, we need to obviously be ready to execute and get stuck in.
Mate, give me that film. 93. Oh. Oh my God. Fucking hell, mate. Oh. I don't know why I didn't have a field 93. It's just ridiculous. Oh, God.
Okay, so we can see that commitment there, guys. Someone hit those 40s and 39s straight away. So let's try the short now. Let's see if we can get in here. We'll try and offer up these 40s. Note the bobbles at the same time. So bobble sitting on the low, front end leading the down move. Okay, now what we don't want to see is we don't want to, you know, again, if sellers are going to commit, they need to hold firm that offer. That was not a firm offer. In other words, this could just be one hell of a sucker type move here. So we're going to try and keep this relatively tight, but we can see that selling interest, that commitment coming in on the short side. So right now, we're just going to, you know, try and get stuck in on this little bit of flow that's coming in, a little bit of sell side interest. Obviously, keep an eye on that bobble. If it takes those 50s, you know, we could start to see a little bit easier of a, or a little bit more of an easy sort of offer in the market. Okay, again, note, guys, someone sold 40, someone sold 39, and instantly that buyer just took a straight back bid up. So, you know, we've got to pay attention. Unfortunately, there is a buyer sitting there. He is happy to buy into any kind of downside. So again, while sadly we would like it to go down, we would like to take a winner, it doesn't always work like that. Hence why we manage the risk. Hence why, you know, instantly, you know, we're always looking just to reduce our exposure to the market.
I was 40, I lost this front. One tick. I don't know, I didn't have
It's good, you already came back.
Okay, we've cut that trade again. Unfortunately, price action is not playing out as we would like it to. Part and parcel of this job. Most important thing is we don't get frustrated. We don't jump straight back in. We take the loss. We take one or two on the long side, one on the short side. Again, you know, that could change in the afternoon session. Things could become a little bit easier to trade. So right now, we're going to revert to the sidelines. You know, maybe sort of have a look at maybe particularly European equity charts, see if something starts to work out there, some sort of an opportunity starts to play out there. But right now, like I said before, unfortunately, a very slow session. You know, and the last thing we want to do is dig a hole that we have to climb out of this afternoon. So we'll keep it tight. Yeah, if any of you have any questions, if any of you want me to go over any kind of charts or have a look at any sort of patterns or you know, potentially what we could see this afternoon, again, you've got me on Twitter. Feel free to ask. Otherwise, you know, we'll just get on with it and keep looking for some opportunities and see where we can make a few ticks here and there. Okay, so we've had a question here, is, you know, when someone's come in with is the Euro Stoxx 50 a good short with a stop above the high? Now, in essence, it was a good short once we re-entered or failed to extend on the early morning highs. But now that it's come back and effectively come back above that initial balance high, it's very likely that we're going to extend the high. Notice we might not necessarily have a trend move. We could probably go 2 ticks and come straight back in, but that trade of selling, you know, once the market's turned with a stop above the high, that trade will no longer be valid once the stop is taken up above the high, and it probably shouldn't even be at these prices if that trade was still going to work. So whilst that was very much a valid trade, you know, at sort of, I think somewhere around Hopper State this morning, that was very much a valid trade and a very good trade to take on in terms of risk reward. Right now, you know, the conditions have changed. You know, the way the market is now trading has changed that idea, and as a result, you know, if you are still short, unfortunately, it does look as though this market wants to just maybe breach the higher end of the range. So what we're going to do is we're going to pay close attention to how it responds above these 3400s. You know, if we see a little bit of a pop and maybe some sort of gain, we might just try and scalp this market. Very, very tight risk. We are obviously going against the trend at the moment. Just note, obviously, this morning when we you know, popped above the highs, you know, we were doing it on sort of 7,000, 8,000, 9,000 contracts every minute, and so let's just watch the volume above these highs and see what happens. So again, okay, the market's now taken the high of the morning. We can see 1,000 on the market. You know, let's see how this plays out. We can see obviously someone buying it. We can see someone reloading the O1s, and you know, there is quite a bit of volume up here. So You know, again, if we're going to fade the trend, yeah, it might be a case of we're better off waiting for it to come back below these 98s before taking on a short. But right now, it does look as though, you know, this market just wants to maybe not trend higher, but just grind or accept prices higher for now. So again, let's watch the reaction here. We're going to talk a little bit about the price going through now. As we can see, we've taken out the high and we've seen two-way trade. So that's the first thing you need to know, guys. We're seeing two-way trade above the high today, which is telling us that, you know, the probability of a trend-like move is somewhat reduced. In other words, in a trend-like move, you should only see one-way participation. You should only really see buy-side flows going through the market. And you shouldn't really see sellers selling into these prices if we're going to have a trend-like move. That's not to say we can't move higher in terms of price, but the way it's going to move is not going to be a trend-like fashion, or there's a much lower probability of being a trend-like fashion. So, you know, that's something important to understand. You know, you can very clearly see that it's going bid, bid, offer, offer, bid, bid, offer, offer. So there's a lot of two-way trade going on here. It doesn't necessarily mean it's a short. You know, obviously you've got to stick with the most recent price response, which is to the upside. But you know, so long as there's this two-way trade, it's neither here nor there. It could and probably should move higher, but it could very equally come back below that sort of break point at the double O's 99s and then drift back in towards the accepted value of the day. So we're going to zoom in here, quickly have a look. Quite a bit of volume being traded up here. You know, so there is quite a lot of a fight going on here between the buyers and sellers at the high of the day in the European equities. So again, you know, you can see quite a little bit of absorption coming on the bid. So someone is executing a long trade here. There are, you know, whether they're getting out of a short or they're initiating fresh longs, there is a long trade being executed, these double O's. You know, so it just got to pay attention to when that finishes, or equally when the seller stops selling, and then we should get either a move higher or a move back down towards value. Interesting enough, you know, talking about the euro dollar, you know, we did get a response point of these 47s. It's come nicely off that high now. Notice how it's come back into side value. So what we would expect to see is now for that euro to trade back towards the other side of value. So somewhere around these, you know, 10s, 11s, somewhere around here, you know, we might see the market just bounce back off and move back in towards value. So what we're going to do now is you know, because it's come down in a relative straight line, in other words, you know, we've seen very little buying on the way down. Once it hits this sort of 111 mark, we're just going to watch closely, maybe look for a little bit of a buy opportunity as any of the short sellers take a little bit of profit. So we're just going to keep an eye on that. You know, fortunately we missed the trade to the upside, didn't quite get to where we wanted it, but not a problem. We can obviously make money on both sides of the market. So again, obviously, you know, we've got the bunds, yeah, you know, still dicking around those 40s, really sort of making it frustrating for anyone trying to trade it. You know, whilst it does feel like there is downside or scope to the downside, it's not going to be easy scope, and you know, as a result, I'd far rather commit capital elsewhere where something's going to be a little bit easier. You know, as a day trader, you know, our objective is to be green. Our objective isn't to be right. So, you know, we try and find the opportunities that are going to be easy and more important, that we can manage our risk on. So that's kind of what I'm looking for now. You know, I'm not looking for any swing type trades. I'm just merely looking to scalp the market until some flows come in, and then I can start swing trading the market and position trading again. Again, also, you know, in terms of clip management, you know, in these conditions, in these sideways conditions, you know, I'm going to be far more reluctant to do any kind of, you know, significant risk. So I'd rather wait for for things to make sense before I commit, fully in terms of my capital allocation, and that's important to understand. And a lot of traders, I know, you read a lot of these books, and they have these very simple approaches to managing your capital, and they sort of take this 1% rule, or they take 20% of your day in terms of a trade, and I don't necessarily agree with that. I think your clip needs to not vary too much. I mean, you don't want to have 20 different types of ways you enter and exit a market, but you need to have at least sort of a convicted, very convicted, and most convicted type clip where, for instance, if I was trading this euro and I was very convicted, I would put maybe 20 contracts in the market, whereas if I was semi-convicted, I had a very strong bias, then maybe 10, and if I was just scalping around, chipping away, maybe 5. That way I'm increasing the probability based on my beliefs and my trust of the market. Now, it's so important you play with those concepts, because ultimately they're going to increase your bottom line down the line. So let's have a look at this Bund again. As we can see now, that Bobble's literally just made a new low on the day. Very interesting that the Bunds aren't unlocking here. You might just find in the next couple of minutes that suddenly we get a very quick, sharp down move in these Bunds. It is weird that we haven't quite tested that low yet. We should have tested that low. Obviously, right now there is a lack of sellers to commit, and hopefully that can change. What we might do again is we might just try and get in on this again one last time, give it a go, see if we can take that short on one more time. But this time, note, I'm not going to be aggressive on the price. Again, another concept I talk a lot about with our younger traders. There's a time to be aggressive and there's a time to be passive. In this case, obviously, there's a lot of two-way trade going on. I'm going to be passive on an entry. I'm not going to hit the market because I'm just going to take on more risk. So if I get lucky and I get a fill somewhere around these 39s, 40s, excellent, great. I can manage the risk accordingly. If I don't and it goes to the lows, that's cool too. I miss the trade and I'll take on the next opportunity. So that's kind of how I'm looking at it. And important you gauge that for yourself. There are times you must be aggressive. You must hit the market. With less concern about price. And then equally there are times where you should be stubborn and say hang on a sec. I'm not paying down. I'm taking the price that I want, and I'm going to be patient and wait for it. So make sure you differentiate and learn between the differences. Very unfortunate we're not getting a great deal of activity this morning. Would have been nice to get something, to sort of see something and execute something based on sort of set parameters. But what we can look at here now, if we unfortunately my cameraman's not here, but what we can if you had a footprint chart up, you can see at the high of this Euro stocks now, there's almost 20,000 contracts, and I can show it to you on the actual ladders. You can see about 20,000 contracts is traded now between sort of 99s and 02. So in a 3 price range, we've had 20,000 contracts traded. Now, the important thing to understand is that in an uptrending move, in essence, if it's a trend-like move, we shouldn't see that much sell-side action. So what it's very suggestive of is that there are interested sellers at these levels, and if that's because they want to be outright short or because they're taking a little bit of profit at these levels, it's important to gauge or interpret that, because if those sellers stop and they stop taking profits, we could unlock a little bit of upside. But at the moment, it just doesn't look as though we're going to have any kind of there is someone selling it, and it's important to understand that because he's kind of holding the market at these levels. So yeah, okay, we'll keep an eye on this. Obviously, we've just gotten filled on these Bunds. Again, unfortunately, we're going to keep it very, very tight here, and hopefully somehow we can actually get an opportunity away. Again, we don't particularly want to see 41s lift. 41s lifted, and we are scalping, so we'll just get back out of that trade. We, like I said, we're not risking any great deal of money. We just for lack of a better term, we're playing around. You know, that is our job as traders, is to play around. But more importantly, when we play around, for instance, you know, when I'm trying a short here, I'm learning a lot of information. I'm gaining information. You know, I can feel the market out just by being involved, just by having some form of a trade on. You know, the mistake a lot of traders make is they cherry pick and they sit there all day waiting, and then the so-called holy grail trade setup comes, and you know, they're not ready for it. They botch it, or they don't quite get it right, and then they don't really progress on the day. And that's why, you know, I say to all new traders, if you want to be good, you know, the golden advice is not buy every single book, or, you know, go and pay millions and millions of you know, pounds in courses and all that, because that's not going to help you. What's going to help you is physically interacting with the market and then learning as you interact. It's almost a case of you know, learning by mistakes, learning by making mistakes, because that's ultimately how you'll learn and experience, but ultimately how you'll remember from your mistakes. So important. You know, right now what I'm doing is I'm gaining information. You know, I can feel that, you know, every time I've bought up at 42s, it didn't go higher. Now that I'm selling down at these prices, it doesn't want to go lower. And yeah, okay, it's frustrating for some, and it's annoying, and it sucks, and you know, no one likes to lose money. At the end of the day, it doesn't really matter, because I'm gaining information, and that information is that there's very little momentum. There's very much a lack of wanting to sell below these prices. So it's telling me a lot about this market at this present time at these prices. So let's just keep an eye on that. Again, don't want to see those 41s trade through. If they do, we get out again, and again, we move on to the next opportunity. Okay, again, not the reload, so he's 41s traded, and you know, we can see this. So someone absorbed the 41s and sold back into the 40s. So we're still okay. So long as the buyers don't lift up those 41s, we're still in theory okay for now. You know, so let's see how this plays out. But I think the next trade we're going to do is we're actually going to move across to this euro, because it does seem to be responding a little bit more. And we're going to move into somewhere around these 10s and see how the price reaction occurs around these 10s. Note again, we are very much going against the trend in the euro, so we're going to try and manage a position. We are going to try and scalp. I'm not trying to position trade. I'm not saying, you know, I mean, it could very easily go to the highs, very easily go to the lows, but we're just trying to scalp based on where the acceptable parameters of the market are on the day. Okay.
Fuck's sake, lost everything. How can people be that fucking retarded to fucking buy this price?
Very important, guys. We are approaching the top of the hour. What I would always say is there are algorithms that are attached to the clock, and they do certain things based specifically on time. So always be at your desk top of the hour. You know, you just never know when you might get some sort of a flow. You know, for instance, if this bund just suddenly blipped down to 36s, I'd be happily, you know, bidding straight into that. You know, if it did that on the top of the hour. So, you know, just got to watch for little, almost silly little patterns like that, because it's those silly patterns that occur time and time again, and that you know, that they're not so obvious, but in essence, they can be quite lucrative. So again, notice how the 41s have lifted now. We're going to get out of this again. We didn't particularly want to see those 41s lift. Trade's gone again, and it looks as though I'm actually going to back out completely out of those bunds now, and maybe come back in the afternoon. You know, try and you know, see if there's something there this afternoon. But right now, just not interested in the bunds. It's just not. You know, it's sitting in a 4-5 tick range, which can become particularly expensive if you keep going at it and going at it and going at it. So, you know, we're going to take away from that. We've lost a little bit, not the end of the world. But we've gained a bit of information that there is a real lack of sell-side interest below the 38s, but equally, there's a real lack of conviction to buy the market so long as the bobble and the T-notes are on the low. So, if that bobble were to turn back around and go bid, you might find that Bund actually just finds a bit more of a strong buy-side opportunity. So right now, we're learning, we're gaining information. We're losing a little bit of money, but it's okay. It's not the end of the world. As unfortunately, in everything in life, you have to pay for education. So that's all we're doing right now. We're paying for information. But let's go back into this euro. Let's see what we can do in this euro dollar. Let's see if we can nick a few ticks here. We have seen a relative straight line. If you get a bit of a shorter term time frame chart up, you will notice obviously the euro's come all the way from that high back at 48, and it's continuing offering. So what we're going to look for around these 11s and 10s is we're going to look for a very direct bid into the market, a very almost a profit take bounce, which what it'll look like in essence is you'll see, if I make this a little bit bigger, and let's quickly do this. I'll quickly just trade this through. So there we go. Let's do this.
Very good. Can I say no? Oh no, because I'm already so
Skip
fucking
10 on.
so much size.
Make it a little bit bigger for you guys so you can see it a bit better. So what we're going to do effectively is we're just going to, in essence, watch the price response. Now what you would typically see on a profit take bounce is a very clear piece of price action. It'll come into the price. So if I think that price is going to be 11s, it's going to come into that price. And then ultimately what's going to happen is the offer, in other words, all these offers or people or participants offering the market, those should in essence disappear. If everyone is short, in other words, the short-term trend is to the downside. We know that because we've had a straight line down. So if we see a bit of profit taking, what we should see is buyers or the shorts that are covering bid the market and remove the offer. So it should very quickly go back, but in other words, it should come down into these 11s and it should then sort of instantly go 12 bid, 13 bid, 14 bid, 15 bid, 16 bid, maybe 17 bid as we see a little bit of profit taking. So important to understand, the net positioning in any kind of move. There's, it will give you a very good understanding of, what sort of price action you can see going forward. So we've got another 28 minutes. Again, if you guys have any questions, if you want me to look at a specific market, I can trade quite a number of them, of the major markets. Happy to trade anything. Other than that, I'm just going to sit here now. I'm going to wait for this, and hopefully we can get a winner before we switch off here today. Otherwise, unfortunately, I've got a reputation to uphold, and that might be, the guys behind me might not believe that I actually know what's going on. So right now, just hopefully we can get one little winner out of this, finish on a high, and then maybe take any questions you guys might have. So again, whilst European equities are continuing this little grind higher, we can see there's a lot of two-way interaction. Again, not the easiest trade to be long on, quite a tough one to be long on. But right now there definitely is a little bit of strength coming into the buy. So let's see how this plays out in this euro. Again, we're going to keep this particularly tight. We do want to see a very specific set of price action at these lower prices. So we're just going to keep a close eye on this, and let's see how this plays out. So 13's trade. Okay, now note, what we want to see is we want to see the price offer and instantly see a bid and watch these offers very much disappear off the page.
Bid. Are you sure? Or did you buy it?
Huh?
Did you buy Eurostocks? I'm sure.
It's just doesn't let you in, like this counter just.
seen a little bit of a response here, guys, in this euro. It did sort of stop just on me. Sadly, didn't give me a fill, and we have seen a little bit of buying interest coming in here. So we know there's someone sat there buying it. Again, not the ideal price action we want to see. We probably want to see a little bit more of a stronger reaction from the buyers, but again, it does seem as though someone stepped in to buy it there. So paying close attention now. It does look as though we've run into an area where some of the sellers are going to take some profits, and hopefully we get a bounce back up towards these sort of 24, 25 area.
The results, the UK sales with all 4.25 billion sterling worth of the 1, 3 and 6 month bills. Looking at the Victor covers, firstly for the 1 month bill cover comes in at 7.1 times. That's against the prior 4.5. But a lot of the increase in the cover probably likely due to the cut in the size of the 1
I've been asked to trade cable live. There's actually a very good reason I'm not trading cable today. Since the retail sales number yesterday, the cable effectively has gone dead. The flows have gone dead in the cable. What people must remember is that flows come into certain markets at certain times, and pretty much ECB took they took the show yesterday, and all the flows that we've seen in the currencies have been in one, the euro, and then also quite a little bit of flow coming back into maybe the Aussie dollar, some of the commodity currencies as a result of the QE decision. So right now there's no flow in cable. That flow will come back at some point, maybe not today, maybe next week, but right now the cable is literally being dragged around by some of the other markets. So I'm not really interested in the cable simply because it's not a market right now that's going to give any real flow opportunities. Whereas the euro, as a result of yesterday and the decisions that were taken, there should be a lot more opportunity for flow. So again, now we're starting to see that bid open up a little bit in the euro stocks, becoming a little bit easier. Maybe people who are shorting effectively being caught out. And we're starting to see a lot more of aggressive type bid in the euro now, euro stocks. We have got some interesting levels in the euro stocks, a little bit higher though, somewhere around these 40 levels. We have got the 200-day moving average come in, and markets do tend to respect these bigger term sort of moving averages and all that, that have more sort of directional significance. So if we got up to 40s today, somewhere between 33s and 40s, I would be a very interested passive seller. Note, I am looking to fade the market. I accept I'm fading the market. And as a result, trade location is significant here, guys. Listen carefully. If I'm trying to get short here against a trend, I accept and understand the fact that I'm possibly going to go offsides, and that offsides could be a few ticks, it could be a lot of ticks, but I accept because I'm trading within the right location, or a location where I feel there's a high probability for me to take a number of ticks to the other side of the market. I'm far more willing to go offsides, and I'm more willing to risk a lot more of my day just based simply on that concept. So make sure you understand that. Make sure you understand when you're scalping the market with a tight stop, and when you actually position trade in the market with confidence in terms of where the trade is, or where the price is located, and where you're actually getting involved. So right now, anywhere between these 30s and 40s, I will be an active seller looking for short opportunities only, looking to fade into this uptrend, and again, hopefully take on an opportunity. But right now, still hoping to get this fill in the euro, and see if we can scalp this market.
Some of it being driven by the move higher in the US equity futures, Nasdaq and even S&P going through yesterday's highs. In terms of Europe, in the cash markets, the latest move higher has been led by the food, healthcare and household and personal sectors.
Okay, we've had a tweet coming in here. What's my view on the treasuries after Bunds unable to make them go bid yesterday? Also views on GBP and Bank of England. Very, very, very significant question. In essence, what Nomadic is tweeting, and it's a crucial question, is why did T-notes, treasuries effectively, if you take the 10-year US, it finished flat on the day yesterday. It literally finished around flat on the day, maybe fractionally up on the day. Whereas you look at the most of the German and European curve and some of the gilts, I mean, they were all up and very nicely up, of course, with the European bonds outperforming. So the fact that US bonds yesterday could not rally when they should have rallied is telling us that there is actually someone sitting there selling those US bonds, and that hasn't just been the case yesterday. That's been the case all week. You know, if you do a like-for-like comparison of European bonds versus US bonds, you will find that there's been a significant outperformance from European bonds. Now, what that means potentially in terms of implications is if this afternoon we see some sort of weakness come back into European bonds, maybe a continuation profit theme, or maybe start to see the front end of the European bond sell off, we could very, very well see a very nice down move, in particular the US bonds. So, crucial question. Pay attention to the US bonds from 130 on. They are going to lead this afternoon. They are going to create opportunity for us this afternoon, and I'll definitely be very interested in trading the US bonds. So that's a fantastic question. There is something brewing in these US bonds. The other thing I will point out: do not forget we are heading into what is a live meeting for rate hikes come Wednesday next week from the FOMC. It's crucial. You're going to see some punting going into the markets. That punting will come in the form of a hawkish surprise or a rate hike, and as a result, we could see some significant dollar buying positions or some significant short positions heading in the US bonds going into that meeting over the course of the next 2-3 days. So pay attention to those flows, guys. There will be last minute punting, not because I'm guessing that, but because the risk reward is so good. In other words, if they hike rates, whilst there's only a 10% chance they hike rates, if they hike rates, you are going to make maximum reward, and it's going to cost you very little, because at the end of the day, if they don't hike rates now, they should maintain the stance of ready to act, ready to hike when the data turns. So, the risk reward metrics on that punt make a lot of sense, and I would definitely be advising, people pay attention to the US bonds over the next day or two. In terms of any views on the cable and the Bank of England, well, Bank of England is, we've got 3 members now in Bank of England's wheel, and McCafferty and Kristen Forbes, and all 3 of them are saying the same thing, which is that we're seeing wage pressures, and as a result we're going to see inflationary pressures step back into the market over the next couple of months. Now, we've also had the likes of Carney and 1 or 2 of the other members come out and say, they're very much, the next step is for a hike, and they're probably going to come around the turn of the year. So, the market's looking at the UK and saying, well, rate hikes are only going to come sort of the back end of next year, and yet, the governors or the governor and his members are all saying something very different. So there is that noticeable divergence between what the market thinks and the Bank of England members think, and that divergence will close at some point. It's going to require a catalyst and a response from someone who can literally move the market and actually put the trade on. So important to understand that, a lot of traders assume their market's always correctly priced. They're not. They're most definitely not always correctly priced. And we've seen that, for a large part of the course of this year. The markets, the Fed has told us that in essence it's appropriate to hike this year still, and yet the market says, well, no, hang on a sec, we feel only March next year. Now, I know obviously the Fed's been wrong most of the year, but the closer we get to this end of the year, the more the market should come in line with the Fed. So those discrepancies, and they do occur. The markets aren't always correctly priced. The important thing is when they're not correctly priced, make damn sure you take advantage when they need to reprice and correct themselves. So what I mean by that is, in essence, if all of a sudden we got a really good wage growth print from the UK, or a very strong uptick in inflation, the cable, in essence, against most of its crosses, should have a very strong bid. And by strong bid, I don't mean 10, 20 pips, I mean 100 to 200 pips, because that's what a correction or the market being put back in line should look like. So make sure you understand that and take advantage of knowing when there is a mispricing in the market. And the important thing to understand, guys, is that these mispricings can take a long time. They can stay in the market for a long time, as we've seen all year. The market's been very much differently priced to what the Fed's been telling us all year, and so they can take a long time to play out. But when they do correct and the repricing comes, make sure you just take advantage of that. So hopefully that answers your question. Other than that, as we can see now, sadly didn't get filled in this euro. Would have been my winner for the day. Would have been my my glory trade. It's bounced very nicely off those 12s just in front of me, and we've gotten that little profit take move now. The market just looks like it wants to just keep drifting a little bit higher. We are back inside value, so again, that trade opportunity is now gone. It would have been a nice opportunity, but sadly it isn't. So yeah, what we'll try and do now is we're going to try one last little trade. I think that's all we're going to have time for. We're just going to play the range again. You know, we did see, you know, some good sell side pressures coming in this year to the downside. So, you know, we would expect to still see some sellers lurking at sort of some sort of reference points. We've got a nice little reference point here at 35. Again, the reason it was a reference point is very simple. You know, the market sort of, as we went up, we got above the 35s, we came back, retested, bounced again off the 35s for a second time, made a new high, came back a third time, and sort of just sat here on these 35s for some time. And once we took them out to the downside, we got very much an unlock of positions. In other words, anyone long covered and anyone who wanted to be short got short, and as a result, we had a straight line move down to 11. So it was a very, very important pivot point in the market. Also note, we can see a lot of volume trade there. So there was a lot of interaction around that price, and we would expect that again to remain a pivot point for today. It should act as a good referencing point for us to lean on for the rest of the session today. So keep that in the back of your mind, 111.35. Other than that, any more questions, feel free to ask. Obviously, I will be doing a commodity and currency report at 12 o'clock. We're going to cover the euro, cable and oil markets. We're going to continue the themes that we saw at you know, at the start of the week, and just talk about how those plays played out, you know, the ones we were talking about, and more importantly, have a look, particularly pay close attention to the euro and where it is you know, at the moment, and how we can capitalize in the euro over the course of you know, the weeks into the December ECB. As we can see, with regards to this Bund, just looking at the chart, we can see we did the right thing just to step out of it. You know, it's neither here nor there. It does seem, you know, purely from a technical, you know, perspective, if I was to be trading this purely from a swing trade, I'd be looking for long trades. You know, back up towards this sort of 60 area, very tight little range. But unfortunately now there's very little price action to speak of. So, you know, it's very choppy, and again, I always like to say to myself, you know, when I'm in these conditions and it's slow and it's boring and there's nothing going on, I always say to myself, you know, on every trade, is there going to be a higher probability trade that I'm willing to risk this capital on? And I promise you, if you say that to yourself, you know, 9 times out of 10, you're going to say to yourself, yeah, actually, you know, let me just chill. Let me read the FT. Let me do something productive. Look over my charts. You know, maybe look at a pattern play I've been, you know, seeing. Maybe just be more productive elsewhere and save that capital for that higher probability opportunity. So important to learn that lesson, guys. You know, whilst it's important to trade and be active and, you know, engage in the market and feel it out, equally there is a time, you know, for instance, just to get off the buzzer. You know, and that market, for instance, if you're a Bund trader, you should be well off the buzzer now. There should be very, very little you know, interaction from a day trading perspective going on in this market, as it's not offering a great deal. So, you know, preserve that energy, preserve those opportunities for elsewhere. elsewhere. Okay, so we've you know, looking at these equities again, we've had a little bit of an extension now of the morning's lows. You know, very important to note the type of extension. Effectively, in essence, what I mean by that is, over the course of the morning, the range was 73s up until double O's. So we had a 27 tick range. Now we've effectively extended by another 18 ticks. So we've almost done 100% extension of the range. Now, I know a lot of people say, but how is that significant? But it's very important to understand, guys. There are a lot of mathematical type program trades out there at the moment that use particularly percentages and ratios to trade off on their strategies, simply because they make mathematical sense, and computers can effectively, they can understand math and they can execute very well based off math. So make sure, you know, if you're a day trader, accept that's the world we live in. We don't live in a trading environment now where you know, it's 95% driven by humans. It is pretty much the other way around now, where most of the trade is driven by you know, very mathematical type you know, algorithmic programs. So understand that. Learn to use math in your strategies. Learn to understand mathematical moves in your strategies. You know, when, you know, for instance, you get 100% extension of a range, you know, bang, that could be a wonderful, wonderful opportunity to look to fade the market as it's extended the full range. So, you know, maybe we get there in the next 10 minutes. We'll keep an eye on it. You know, so right now, the high of the morning, that would take us up to 27. So let's give it a go. You know, let's see what happens. Yeah, we offer the 27s, and you know, we see effectively how the market plays out there on 100% extension of the range. Again, not doing anything too sort of magical here. You know, not trying to enforce opinion, just trying to take on a very logical approach and manage the risk reward around that approach. So that's what we're going to look to do now. Other than that, you know, if we can come back down towards you know, lower levels, maybe somewhere around back towards double O's, we might buy that a little bit later on. But other than that, we're just going to look to just keep scalping away. Just on a note for the rest of the afternoon, guys, obviously we've got the Canadian CPI coming out at 1:30. Now, very important is the number in essence is important for Canada, obviously. You know, they've just had their recent monetary policy rate decision earlier this week. But more important is to understand is we've seen last week we saw a US inflation surprise to the upside and actually tick up. We've you know, we've started to hear from central banks about the drop off in the base effects as a result of low oil prices starting to lead towards higher inflation numbers towards the end of the year. So important, guys. You know, remember the whole market is positioned in this idea of low inflation slash deflationary type environment going forward. So, you know, if we got some sort of a very strong uptick in the Canadian inflation, whilst it's not necessarily a huge market mover in the global context, it can be a market move in terms of sentiment. In other words, you know, if people, you know, they for instance saw last week the inflation tick up in the US, and they you know, suddenly this week they see a tick up in, you know, an unexpected tick up in inflation in Canada, maybe people will start to sort of, you know, buy out of this or sell out of this idea that there's deflation, and maybe buy into the idea that actually, you know, there could actually be higher inflation numbers in the weeks and months ahead. So make sure you understand that, you know, whilst it's not necessarily going to be, it's not necessarily going to move the DAX or the Eurostoxx 50, it can definitely create sentiment that can create big trending moves. So just make sure you understand that it is important, and obviously if you're a Canadian dollar trader, it's very important. I'm going to try one last little scalp here. Very important on the footprint chart, we can see that you know, all this buying that's come into the Eurostoxx, the sort of the last line of defense, you know, that will confirm that this buying's now done, will be these 05. So we're gonna just put a little bit there, see what happens on the interaction of 05, see if, you know, that buyer is still really there, and you know, if not, if it takes out the 05s, it's probably going to leak a little bit lower. But right now the 05s was a bit of a reaction point on the way up. It was the sort of the last strong bit of absorption we had from the buyers before the very aggressive extension up towards 18. So we're going to give that a go, see what happens. Again, we're not looking to do anything magical. Going to keep the risk nice and tight, and maybe look for a little extension on the highs there. So again, we're going to go for a little 13, 14 tick up move here, and we're going to keep it very tight in terms of risk, maybe a 2 tick stop. So maximum risk reward. We get it wrong, so what? We get it right. We're looking at good 6, 7 risk to reward. So again, it's about managing the downside, and if you manage the downside, the upside will naturally, as a result, take care of itself. So just bear that in mind.
Pierre Berger. Ouais. C'est un connard de milliardaire PD. Eiffage annonce la mort de son PDG Pierre Berger. Je suis content. Longtemps qu'il aurait dit passer une semaine.
T'as vu Johnny Hallyday est mort?
Quoi? Putain là. Allez, j'étais fou là.
Okay guys, we've got another 2 minutes to go. Yeah, I'm going to take this opportunity. Thank you for joining us. It's been fun, kind of. Hopefully you learned a thing or two. I think the important thing with these live trading sessions is, yeah, it's always nice to watch someone show you how to trade, but that's not the crux of it. You're never going to be able to trade the same way as me. You're never going to be able to interpret something the same way as me. But what I can do, which is important for a lot of younger traders, and even sometimes very senior traders, is I can provoke certain thoughts. I can just get you to think about things in a way that maybe you hadn't thought about it. So that's kind of why these sessions are very important. It's yeah, okay, you can see that there are certain opportunities that they work and sometimes they don't, but the important thing is to understand what are the characteristics or what are the things that consistent traders do well, in terms of managing risk, in terms of managing the ideas, managing the energy. Those are the kind of things you want to take from these sessions and you want to learn from these sessions. So again, thank you for joining us. It's always nice to help you guys, and hopefully you learn a thing or two. And obviously, for the traders on the Futex floor, you've got me. You can always come and talk to me. For the guys that don't have me on the Futex floor, obviously you've got me on Twitter. Feel free to send me a message. Otherwise, yeah, good luck for the rest of the day. For the people up at the Trade Investor Show, I will be up there a little bit later on, and hopefully I can meet a few of you and we can chat and share some thoughts or whatever, and maybe see what's happening. So yeah, if you have any questions, obviously feel free to tweet me. Otherwise, good luck for the rest of the day, and yeah, we'll catch up again next time.